Today I'm going to respond to a reader question which actually came up on Facebook, or a comment that came up on Facebook, which the explanation of which will hopefully clarify about the nature of the dollar, the nature of a gold and silver system, and how the two interrelate. The comment said that there is no reason why you can't operate within the two systems, i.e. pay dollars when you must and pay metals whenever opportunities present. I want to respond to this because it both gives insights into the way that money works, but also reflects a misunderstanding of what we are attempting to do in this group and why. Because we are not just looking at simple exchanges of metal for dollars or metal goods and services for metals, but we're looking at an entire monetary system, and it's that system that gives an answer to this question. In summary, the reason why you cannot just pay dollars where you must and then where opportunities present pay gold, you cannot do this is because you can only consistently pay in metals when your income is in metals. I'll say that again. The reason why you cannot do this is that you can only consistently pay in metals when your income is in metal. I'm going to give a little explanation here by my high-level diagram about what we're looking at in a monetary system. In a monetary system, we do not just have exchanges of goods for metals or metals for goods or things like that. What we have is an integrated system where we have the four economic functions of production, consumption, savings, and investment, where there are also financial functions that occur behind these four basic economic activities. Things like invoicing for production, invoicing, finance, and income. For consumption, we have purchases and expenditure. Savings, we have bank accounts and cash, which in the instance of metals is actual metals in the hand or coins in the hand. And then investment, which gets into the realm of credit, finance, borrowing, lending, and interest. So all of these functions and their financial counterparts are actually integrated in a monetary system. And if you notice that we do all of these in dollars. We have production, consumption, savings, and investment all occurring in dollars in their different forms. But an interesting or a critical point to note about this is any one of these functions actually on its own, if you perform any one of them on their own, it requires all of the other functions to be performed in the same currency. If you're going to produce something, let's say you're selling your labor for dollars, or you're producing a good or a service that you're exchanging for dollars, it is then completely logical to go down to the shop and actually consume or conduct your consumption activities, basically buy your goods and services in dollars, denominated in dollars. At the same time, if you have a bank loan, if your investment activities are denominated in dollars, well, it makes sense that your income, this locks you into your income being in dollars and your consumption activities being in dollars. Also, if your savings are in dollars, that locks you into getting loans in dollars, having your production in dollars, having your consumption in dollars. This is, in the dollar system, is a diabolical trap in my opinion, particularly when it comes to something like cash. Because if you're holding, it is the nature of the dollar in the cash that's the problem, not the actual physical cash. Because if you're holding dollars, your savings, and they're not actually savings in dollars, but your savings are in dollars, which means that requires all of your other economic activities to be conducted in dollars. The mere act of holding cash actually requires you to use the dollar for all of your other economic activities. But the same goes for any one of these. each one activity is individually sufficient to require each other economic activity to be done in the same money and currency. I've also put down here some other activities which are interlinked with this network, as I call it, which are the regulatory system, the taxation system, and also the system of law. These are other things that we want to get away from in a gold and silver system and conduct these activities ourselves at our own discretion. So if your taxation, this is one that the MMT are on about, or the modern monetary theory is about. If your taxation is in dollars, well, that requires you to have an income in dollars, which requires you to have a bank loan in dollars, etc., etc. So all of these concepts are actually interlinked. But with a monetary system, it's mainly these four economic functions that are at play. So conversely, there is a potentially a parallel system in gold. Now, when I talk about exchanging gold or silver for goods and services, we're not just talking about simple exchanges, we're talking about a monetary system in gold. And in a monetary system in gold, we are starting all four of these economic activities denominated in gold, including credit and lending, by way of bills of exchange. So instead of a negative cycle or destructive cycle going on in gold and silver, and copper, we can have its counterpart, which is a productive or a virtuous circle, where you are also locked in. If you do one of your exchanges in metals, or your economic activities in metals, then it requires you to have all of these other activities to be performed in the same money and currency of metals. So it locks you into a virtuous, or it requires that virtuous circle to be in place. So a simpler way to look at this is economic activity or exchange is not just buying. It's not just selling. It's buying and selling. Each of these functions are, very simple ways of buying and selling different types of economic goods. Human economic activity is what they call arbitrage. It's buying and selling. And an economic system, or exchange and re-exchange, an economic system is not complete without exchange and re-exchange in each one of these individual functions. So the idea of the reader is that in a gold and silver system, I'll make a point here. In a gold and silver system, prices can fluctuate, but they fluctuate according to buyer demand and availability of goods. They also fluctuate, and they are also regulated by the rate of discount on a bill, which is a more advanced concept. But basically, prices are largely stable in a gold and silver system. In fact, that prices were very stable for 100 years leading up to Australian Federation. This is owing to the physical nature of gold and silver and the economic properties of gold and silver as the measure of value. A very difficult concept for some to understand, but basically in a gold and silver system, prices are stable and the fluctuations are only minor. You compare that to a dollar system. In a dollar system, prices are volatile. They go up and down on arbitrary and random factors depending on who's regulating what and where and what finance is available to who and what and where in the production chain. Also, goods can actually become unavailable. So the point of pricing is largely irrelevant if actually goods become unavailable. In addition to that, you also have the price of credit and finance also changing wildly, mainly because of interest rates. If a central bank changes the interest rate, they've changed the price of credit, which has flow-on effects through the whole the chain of production of goods, which also affects prices. There is just no stability in a gold and silver system. So that's why prices relative between a gold and silver system and a dollar system are different. They can go up or down. Goods can disappear, and they can be volatile, but that is not a problem or a function of the gold and silver system. It's a problem with the dollar. A very important concept to understand. So the idea of the reader is, okay, I've got an income in dollars. So if you have an income in dollars, this is not how it works. You don't have an income in dollars. You then go and buy gold and silver, and then you use the gold and silver to buy the goods that you want. It just doesn't work that way because you're buying and selling. If you've got an income in dollars, you then go and buy your goods with dollars. You don't go and then get your gold and silver and then buy your goods with gold and silver because you're not re-exchanging. But if you have an income in metal, then you go and buy your goods and services. That is what works because then you're buying and selling in gold and silver. It's when your income is in metal, then you have the capability to buy the goods. Conversely, if you're buying goods in metal, well then you will have an opportunity to get an income in metal at the same time. And it's this mechanism by which prices in the dollar system actually become irrelevant. So the idea that you have an income in dollars and then you've got this problem because the price of gold is fluctuating and the prices of goods in gold is fluctuating and now I can't buy these goods, or I can exploit the system so that I can buy the cheapest goods. I can buy the goods cheaper in gold and silver when they're available, or I can buy the goods cheaper in dollars when they're available. It just doesn't work that way because you don't have an income in gold and silver. That activity of converting your income from dollars into metals can only go on for so long. So basically a gold and silver system cannot be exploited or gamed or played as it can be in the dollar system, which again gives an insight into the thinking of the particular, thinking of those who say that you can actually convert your dollar income into metals without having to have a direct income in gold and silver. I'm going to make a final point here. Dollars are not always offered for gold. Dollars will always be offered for gold, but gold will not always be offered for dollars. In other words, there will always be someone willing to give you dollars for your gold, but you cannot guarantee that someone will give you gold for your dollars. People are reluctant to give up their gold for dollars. And this is due to the nature of the dollar. We know that the dollar is a counterfeit credit instrument. It's also counterfeit money. And that fact that people will not always give up their gold for dollars reveals the nature of the dollar for what it actually is, that it is counterfeit money and a scam that can't always be trusted. So the fact that you cannot, this fact means that you cannot, there will be ever increasing difficulty in exchanging your income in dollars for gold and silver, which then can be used in a gold and silver system. An economic system in gold and silver is actually an honest economic system, which is immersive. It entails all of these actual activities. And this is the key to actually getting gold and silver recirculating and having a monetary system in gold and silver. A gold and silver system only has very limited points of contact with a dollar system. There are some, but only very limited points of contact and only very limited exchanges that are actually legitimate in my view or tolerable in my view. We need to get away from this thinking that we can mix the two systems together because they don't integrate, because a gold and trade and exchange and production in a gold and silver system is honest because it's voluntary. and a whole lot of other things behind it. Whereas those activities in a dollar system are not honest and they're not legitimate. So let's try. The other thing is that, and let's see if we can get away with it. You won't be able to do it. The other thing is something that I've thought about long and hard is we're initially exploring what prices will be in a gold and silver system. For the moment, we are thinking that generally prices will be cheaper in a gold and silver system. What that means is they will be cheaper both for your the goods that you do buy, also for the inputs to your business operation to create your income. That in itself means that the prices in dollars of goods are actually irrelevant. If your income is in metals, then you can afford to pay the price in metals for your goods and services. Basically, the dollar prices become irrelevant. That being said, however, I do expect that some prices of some goods will actually be more expensive, will actually trade at a premium to the equivalent dollar price. That does not mean that someone can come along, that people will suddenly flood out of dollars, gold and silver and then go into dollars, because the same virtuous circle is there. You've got your incomes in gold and silver, therefore you're required to or must have your consumption activities in gold and silver. You can afford to pay the price. But I don't expect that those goods and services will be many, and that basically we need to sort out where that pricing is actually going to end up by our own exchanges and our own system of bids and offers. So I hope that explains a little bit and also explains some concepts around gold and silver, what it is that I and we are actually on about when we're talking about a monetary system in gold and silver, and why there is reason why you can't operate within the two systems to pay dollars where you must and pay metals whenever opportunities arise, because it just doesn't work that way for these reasons that I've just outlined. There may well be other ones as well, but I think they're the main reasons why that's the case. So again, thanks for listening, and I hope this video has been informative and added to your knowledge and understanding of what it is that we're proposing and how it works.